up and about all through the session today. Let's take the conversation forward. Rajesh Kothari, Managing Director at Alf Accurate Advisors, is with us now. Rajesh, good afternoon. Great to have you on the show as always. So actually, let's start with the space, since these stocks are sort of the market focus and there's so much of enthusiasm around them. How do you look at the power space? And it's a long chain. You could look at generators. I mean, we've seen what's happened to the smart meter stocks. They've gone through the roof. You can look at different parts, or you could look at the capital goods companies like a BHEL. Does any of this interest you? Anything in the entire power chain?
Oh, yes. So, we have been bullish on this power chain from almost like, I would say, 2.5, 3 years. And as you rightly say, power gen is just not only about the generation company. In fact, we do not hold any generation company, we do not hold any distribution company, and companies basically where ROEs are suppressed, am I right? And the growth is very, very limited. We rather prefer to basically buy the businesses where there is a product portfolio. So there are many companies in India, particularly the multinationals which are listed in India. They are basically into the distribution reform side of it. So power efficiency, the smart grid, for example, the data centers, they are going to go beyond 5 times in 5 years. Now somebody has to supply the power stations for them, correct? And many such ancillary players, which are actually very large players globally, and they are listed, of course, in India. And those are the companies what we have already been bullish from last almost 2.5, 3 years. And I think the growth is going to be very strong for many of these companies. They are really technology driven. The product portfolio is very, very high. And the growth incrementally is coming from the space where I would say the competition is very limited. There are probably hardly 4 or 5 players in this kind of a space which can basically meet the requirements of the customers. And I think those space, we are seeing very strong growth in last 2 years, and I think that will continue over next 2, 3, 4 years.
Rajesh, afternoon. Have you been a long-term investor in Reliance Industries? Because the stock for very long didn't do anything. It was underperforming. But then of late, the investor interest in Reliance Industries has gone up. The company is moving to monetize its holding, break up its business, unlock value. And there are a few who believe that the downgrade cycle in terms of earnings is behind Reliance and an upgrade cycle is likely to begin. Can you tell us how you've been feeling about Reliance, and has it been a long-term holding for you?
Yeah, we do hold this company, without going into stock specific, I think there are several parts to this entire company. It is one is, of course, the traditional business, and second is the new business. And the good part of this company is the traditional business is a huge cash cow, and that cash cow is now creating the future cash cows. That's how I look at this company, because it is a really, in terms of the sum of parts, each part is becoming like the core business 10 years back. If you split this company into segment A, B, C, D, and probably the D and E, which are the new businesses, they are going to create value equivalent to business A, almost it was 10 years back. So this company, like many other multi-baggers in India, these are the firms typically, they're the traits of creating another company within the company, size of your main business. So say, for example, the largest retail company in India, for example, has created a second format in retail, which is equal to their parent format 4 years back. And in 4 years, they have doubled the size of their company. So I think these are the typical traits of any large, what I would say, the dominant player with a very strong cash flow. And this company is also not an exception to it. So yes, we do own it. Of course, not a very large percentage of the portfolio, but small percentage of the portfolio. But, we remain positive on this name with a, 3, 4, 5 years.
Okay, hi Rajesh, good afternoon. Well, as we speak, Reliance Industries, in fact, it was trading mildly in the red. It's moved back into the green. So there is some investor interest ahead of that big event that we'll see tomorrow. And ITC as well, that's another stock that's moved up. Rajesh, in the last couple of months, there's been a big party. Whether you look at the mid and small cap space as well as the large caps as well have done pretty well. Any stock that you can share where you all have built onto a position or maybe a fresh entry?
Well, Nigel, I think, as we discussed last time, the 3 C's on which we remain bullish. Unfortunately, I can't discuss stocks because of a lot of regulations, but the 3 C's, those 3 C's remains the same. So one is capital goods. We are extremely bullish on this theme. And if you look at our fact sheet, in our budding beast, we are holding almost 25-27% in capital goods. And in our main IOP also, we hold 14-15% in capital goods. Second C is for credit. We are very positive on the overall credit cycle. And within banking and finance, we think NBFC will do better compared to banks. We are bullish, of course, on both banks and NBFC. This is a second holding for our main flagship plan, almost 29% of the portfolio for IOP. And the third C stands for consumer. And like I said last time, that third C is where we have been adding in last 2-3 months in particular, because we believe that the gross margin is going to expand because the raw material cycle is now going to be in your favor. The commodity prices are cooling down, and which is good for many companies, be it a consumer FMCG, staples, or be it a discretionary. And on the other hand, the rural economy is going to do well because the MSP price has been good support from government. And of course, this being election year anyway, rural India normally does well in this kind of years. So demand is going to revive, which will lead to better revenue growth, and margins are going to expand, which will result into better profit growth. So we are positive on the third C as well. So these are the 3 Cs on which we are extremely bullish. And I think that we still continue to see a lot of opportunities. Contrary to general myth that market has gone up, we don't think so. We believe the valuations are still, we are equal to last 10 years. And 10 years average PE for a country which is growing at 15% in terms of the corporate earnings growth, I think it's a reasonable PE, if you ask my personal view. So we remain bullish on the market, and we believe that probably the better days are yet to come.
Rajesh, hi, afternoon. Now, one name where there has been a fair bit of chatter for a while is ITC. The stock's done very well. And the talk is that there perhaps will be a plan to demerge the hotels business out of the company, some value unlocking. Long awaited, but I think now some serious expectations here. Not asking you whether one should buy or sell, but just purely if you've looked at it, do you think the price for ITC factors in any such corporate action, if it were to happen, if you've looked at it?
I would refrain from commenting on this name, but I can tell you only one thing, that every year, twice at least, we see these rumors in not only this name, but in many other companies where, every 6 months we get the same news. From last 10 years, it has been there. We hope some serious unlocking happens for the minority shareholders.
No, that is true. But do you have a view in terms of whether this the current price factors?
Yeah, we unfortunately would not like to.
Okay.
Be able to come
I see that you own Chola Finance. I mean, just to move on, have you looked at the holding company, Rajesh? Chola Holdings, which is also listed, which is also done well, but still a big discount. And the primary investment is Chola Finance. Yeah.
Correct. You are right. So I think that's true for many holding companies, not only for this group, but there are many other companies where the holding companies are trading at significant discount compared to the intrinsic value. Of course, then there are pros and cons. The positive side is you are getting something at a huge discount compared to your intrinsic value. But the negative side is that being a holding company, their objective is to how they can grow their value over a longer period of time. Am I right? And at times we have seen in many group companies, I'm not talking about this name, but there are many others names where the capital allocation decisions are taken. Am I right? And at times it may not be suitable for the minority shareholders, particularly with a view to 2, 3, 4, 5 years. And therefore, we believe that it is always better to play the direct businesses which we understand and which we like, rather than playing through the holding company. So normally speaking, we avoid the holding companies buy. We prefer to buy the businesses which we understand and which we like.
Okay, all right. Got that, Rajesh. Thank you very much for joining in. Always a pleasure speaking with you. We will take a quick break, and as always, we will get you a check on what dealing rooms are saying in our special segment, D Street Chatter.